Welcome everyone. Here we are with the update for month of May 2025. As we are speaking, US markets have recovered all the losses that they incurred in month of April 2025. Okay, right now S&P 500 is trading at near 5900, which is somewhat 4% shy of all-time high made in January 2025. So, what we have seen in the last month, we have seen yields at around 30-year yields at around 4.9, okay, near 18-year high. Only time these yields were seen at those levels were October 2023. At that time, S&P valuation was at around 21x. Okay, today these yields have made 18-year highs. We are looking at a valuation of 28x, which makes these valuations highly unsustainable. Apart from that, we had complete tariff thing that played out in April. So practically looking at yields and valuation, we are back at where we were in January 2025. Okay, so where we are basically talking about somewhere around 20% drawdown, and that possibility still exists and it can happen in next few weeks. So the lows we have seen in April 2025, they are basically supporting the pre-Ukraine war highs, I would say, okay, 4800, and S&P 500 can go down to that level by June 2025. That's basically because valuations are quite unsustainable at this point. Apart from that, if you look at month of April, it was full of negative news. There was complete tariff thing that is still being played out. Okay, market has somehow discounted it, that is kind of does not exist. It exists and it will have an impact. There was our reaction in April, and now there is our reaction on other side. Okay, S&P should have been somewhere in middle. We had GDP print GDP print for US. It was negative. Rate cuts didn't materialize despite Trump putting pressure on Fed. Rate cuts didn't come. So all in all, it was a month full of negative news, and somehow market has digested it. Okay, US-China trade deal has been considered a positive trigger by the market. 90-day pause given by Trump administration is also considered quite positive, with the hope that status quo would be restored after 90 days. So I think the most of the positive developments are already been factored in, even a rate cut to some extent. Okay, and looking at valuations and yield, upside is looking quite limited, and we see a decent downside risk of 10 to 20% from here onwards. Adding to the equation, we have US debt rollover that is coming later in the year. 7 trillion debt. US has overall debt of around 35 trillion. We have 7 trillion debt, that is 20% debt, is scheduled for rollover in month of October. Looking at yields right now, okay, of around 4.9, and considering the fact that US is already interest payments on existing debt obligations is nearly 1.5 trillion and second largest component of federal budget. Servicing debt at present interest rates is simply impossible. Okay, so those rollovers have to accompanied by massive rate cuts, which might only come with a US recession or a deep bear market in US. So we would say that we will get sufficient if you have missed the opportunity for the buying dip in April, you might get 2 more opportunities in next 6 months. Coming to Indian market, Q4 earnings season is nearly up. It's been quite an underwhelming season. If you look at the TTM EPS on a quarterly basis, growth is hardly 1.5%. That might lead to some downgrades in the financial year 25 projections. Results from we can say bellwether sectors like banking and IT have been underwhelming, and growth is in single digit. Indo-Pak war was one of the big event over the last 1 month. The war is right now we are in the ceasefire phase, and markets have recovered all the losses and actually saw US-China deal as a big positive. So as of now, all the losses that were incurred on account of 2 shock events, that is US-China, US tariffs, and second is Indo-Pak war. Both of the events have been digested by the market completely, and markets are trading at 25,000. Basically, it's a new high for 2025. these are the highest levels seen since October 2024. If you look at the valuations for Indian markets, valuations are right now around 22.5x. Basically entire discount that's appeared in month of February 2025 to 5-year and 10-year averages has completely disappeared now. Markets are trading in line with historical averages, and I would dare say they are trading at somewhat a small premium, 1 or 2% premium. Considering the stagnant EPS growth profile for Indian corporate till now, these valuations again looks a bit stretched for now. We can see upside looks limited in the short term, and with the US market expected to revisit April lows in next few weeks, we can see some downside in Indian markets going forward. We believe that the first phase of dip would be completed by June 2025. We can see a fresh rally that will lead to new highs by September. A second dip might materialize that would be linked to US debt rollover, and we might see a journey towards 30,000 from December 2025 to March 2026. So that's all for the month. Brace for volatility.